All right, welcome everyone. Stock market technical analysis. We're going to get right into the charts. No time to waste. So I waited till the end of the day just to see if markets are going to change. We're going to get some sort of change in posture. I don't see a whole lot of change right now. The SPY, the S&P 500, is pretty much flat from yesterday. You can see it's basically unchanged. So Unk on that one. Q slightly higher, just kind of grinding higher. Nothing impulsive, just a slow kind of floating grind higher in tech. And then small caps are down. So really no change from yesterday. So go back and watch the video around the indices from yesterday, and it'll give you an idea of what I'm thinking, because I don't see any technical posture. NASDAQ futures, they're kind of popping up a little bit, but in general, just no real change from yesterday. Just grinding higher. So let's look at some individual trade ideas. I'm going to start out here with this MGM. We might be getting a sell signal into the close. Here's the daily chart on MGM. You can see you've got a clear uptrend line on the daily. Up near the top of this trend line, we have big negative divergence that's been building. You can see it's been building on the RSI and the PPO on both of them. So momentum is dropping. The momentum indicators, when they continue to trend down, where each new high in price is met by less and less smaller highs in the momentum indicators, that's indicating that the buying is drying up in an uptrend, and in a downtrend it's indicating the selling's drying up. But again, this is an uptrend and we have negative divergence, which means these are dropping or selling off, trending down, telling you the buying's drying up. So we're looking for a break of trend line support. Now we're starting to see a break today. Let's see how this closes. Ideally, I don't like to see things break at the end of the day. I like to see them when, the institutional players are taking action, and I like to see breaks on institutional selling, which likely this is not going to be it. But, again, a break is a break until proven differently. So if it's going to break, and hold, maybe we're going to get continuation. So again, looking at the hourly chart, you can see we're starting to break down. My trend line could be slightly off. Going back to the daily, I could be just slightly off. Maybe we're looking at something like that, and we haven't gotten that break. So again, I want to see more selling, but I think it's coming soon. So if you see impulsive selling showing up soon in this thing, that's going to be your sell signal. Flipping over to the financials, you can see that the banks, they reported yesterday that the banks are going to do more share buybacks, and yet many of these banks are actually down today. So you can see here Ally Financial, which is a short trade that I pointed out on this channel a while back. On this channel, I talked about shorting it here, but I didn't say where it was time to short. I just mentioned the fact that we have a short setup. The trigger or entry on the short was right here back on June 10th. And this thing from that sell signal, depending on where you took it, is down 8%, and potentially more if you took it intraday here. And looks like we're continuing lower. So you can see we sold off, we bounced into resistance, and so far we're getting rejected. Now we could chop around sideways some more, maybe slightly pop this and then roll over. But ultimately, I think regardless of what happens in the short term, I'm looking at the next level of support down in this area, right around 43. Okay, so looking for that to head down to 43. That looks good. I'm remaining short on that. And you can see stocks like Bank of America selling off today. Now, Bank of America is still above what looks to be near-term support, but we're just getting some weakness in some of these financial stocks. I think the one that announced the buyback was Morgan Stanley. That one's likely still up. Yeah, see this. So that one popped up. But really, if you look at what's actually happening, if I roll this out, we have a sell signal on Morgan Stanley. You can see on the daily, here's your uptrend line. We held support through here, held support right here, finally broke. Nice impulsive breakdown with a continuation candle. So that's confirmation that is a sell signal. So then you get a back test, which is really all that this is doing. Now we could go a little higher. Maybe we run up into here, maybe make a slightly new high, and then roll over. That's completely possible. All right, so watch for that. But the point that I'm trying to make is it's a sell the rip chart. If it rips higher into resistance, that's where you short, at least in my opinion. Stocks like Wells Fargo, selling down, down 2%. JP Morgan's flat. So in general, this buyback news is what it looks like it's getting sold into for the most part across most of the banks. So we'll see if that continues. I am looking, just going back to Ally, I am looking for more selling. Again, it's going to be obvious that we're downtrending when we're down here. So I'm trying to point out the fact that it looks like we're heading down here before we get down here. Everybody wants to short when you sell off and you're down here and you've had a big sell off. This is where everybody says it's time to short, everything's garbage. But that's typically not the way it works. You really want to short usually when you get a sell signal or just the beginning of the breakdown or reversal of a trend. That's the best place, the lowest risk place. Moving on. Okay, SQ, you can see just kind of not much change from yesterday. It's up 0.7%, but pretty much still in the area where I think it's likely going to get rejected. Now, again, I did talk about this. If you wanted to be conservative and wait to short this thing, then what you likely want to do on the hourly chart is wait for a break of this lower trend line right here. You can see we've been walking up that, and it's been creating kind of this bearish rising wedge. Wrong tool. It's been creating this bearish rising wedge where we've just been kind of walking up this. I believe I had it drawn kind of down here like that. But it's creating this bearish rising wedge. And on the daily chart, or just, again, here's your daily trend line. And you can see we held support all through here, held support through here. Now, we've recovered that support. Let me get rid of these real quick. We've recovered that support right here, but look, it's not impulsive. And that's the nature of, that's the behavior that you want to look for. When you're changing and breaking through trend lines, you want to look for impulsive buying. That's institutions noticing that and taking positions. When you're just grinding through here and we're holding support and kind of grinding around, I think we have a high probability of failing right in this area. So I remain short on this. I think it still looks good. Again, we still have, we had clear negative divergence intact on both RSI and the PPO. So ultimately, I'm looking for SQ to head down to, probably down here. But we do have a level of support right here at 170.50. Again, until that shows up, we can continue to grind higher. So we'll watch it. And here's ANF, Abercrombie and Fitch. You can see here we're just kind of continuing to backtest this resistance area. So look for an obvious rejection in this stock. We are at trend line, we're close to trend line resistance. It can go up a little bit higher, maybe another, 3% or so to the upside to fully backtest that trend line. But we did backtest it right here on that day. Let me get rid of that little squirrely. We backtested it right there on the 25th, full backtest and a failure. Kind of creeping, but again, we're struggling right in this area. So you can see we're holding this resistance line, kind of that former top where he closed at. I think it's likely we're going to reject right in this area. So I like this as a short. And what I would do is, you could take the short here. And if it rallies and say you get an impulsive break, let's say you get an impulsive break back above this trend line up in here, you just stop out, at maybe $50, 50-50, a daily close about 50-50, I think would make sense for a stop. And you just, again, you know you're wrong early and know you're wrong small. That's the name of the game. And risk reward, that's pretty good. Let's say you risk up to 50-50, which would be, from here it's about a 10%, sorry, not quite there. It's about a 9% potential loss. But gain-wise, your first level of support is really down here at 30.29, or that's at least a viable target. And that would be a gain of 30%. So 3-to-1 risk-reward ratio. I like that. It's favorable. So I like this trade. I like it short right in here. Here's another idea, short idea, JCCI. So you can see here on JCCI, coming off the March 2020 lows, clear uptrend, lots of tags of support. We held it here, 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 and then we finally broke. So there's your sell signal right there on JCCI. That sell signal came with negative divergence. See the PPO downtrending and the RSI downtrending. So this was a divergent high, telling me that we're likely starting a new downtrend. All right, it's going to go like that, and over time, of course. And you can see they ramped this thing up to do almost a full backtest of the trend line right up here. So any higher, if we can actually get a full tag of it, that's an objective area to short. I think right up here's, makes sense to layer in or add to a short trade. Again, I'm looking for this to reject and to start to sell off with a nice rejection candle heading down to here. 62 bucks, 62.30 should be a first level of support. And again, just working our way lower. So right there is pretty objective. Another short idea that I've talked about in a while. Again, I'm just kind of updating everyone on this. I'm short this trade right now. You have a clear uptrend line right here. We had negative divergence building. You can see it right there. I'm not sure where my trend line went, but clear negative divergence on the RSI and the PPO. And we had a sell signal or a break of the trend line support. So there's your break. Kind of work your way down, get, impulsive sell-off, rally, continue lower. So again, we could trade sideways. Maybe we chop around in this zone for a while and then we break. All right, that's completely possible. But as long as we do that, as long as nothing technically changes, then, you just stay short. You stick with the trade because this is swing trading. So it's not, you're not going to be right every day. Sometimes you're going to sell off and then it's going to rally for a week or so, kind of go against your position. But over time, it should continue to trend, or in a trade in your favor, as long as you're using the technicals to your advantage. Where are we wrong? Well, at this point, if you run up into the backtest and recover the trend line, that's kind of the area we'd be wrong, is up there. Look at Toll Brothers. Something interesting about Toll Brothers, and again, full disclosure, I'm short this trade. This is a trade idea I've talked about. So I got short on the sell signal right here. There's your sell signal. Still a profitable trade, at least for me. Even if you got in at the close of the day on the sell signal, you're still profitable by about 2%. I entered this one a little bit early, and I'm up about 5% or so. But here's the thing. This trade, you have an uptrend line right here on the daily chart. At the top, you put in negative divergence. There's your divergent high. So see the negative divergence right here? Boom, boom. We broke trend. There's your sell signal. Backtest once, backtest twice, and selling off. Recently, we have some resistance right here at 58.35. That's former support. Now it's resistance. Look what they did today. On the hourly, it's a little more clear. They opened higher, ran it up in the morning, sold it off the rest of the day. All right, closing back below resistance. All right, so that's an indication, when you see things, bear markets, or, I'm not saying that we're in a bear market per se, but I am saying that bear market behavior, bear market for an individual stock behavior is oftentimes they'll rally it in the morning and sell it off into the close. All right, and you'll just see that pops in the morning, sell off, and closing. It's all about the close. The close is one of the most critical data points that you can use. It doesn't really matter what happens intraday. It's how things close and what the market thought of that stock price throughout the day and into the close. All right, so you can see where we closed. This doesn't mean that we're going to completely get rejected here, but it is another check mark basically right here that this is resistance and we're likely heading lower. So again, I continue to trade short on this down to 50.35, next level of support, likely going to bounce there, and then potential down here at 40.73. Quick little long trade idea, if you're interested, there's a potential for a bounce here. Jets, this is a travel ETF. I don't know what's all in it. I think a lot of the airline stocks and whatnot, but you have a clear uptrend line right here on Jets. You did have negative divergence really up here at the highs, and we got a break and a sell signal. So there's your sell signal, but we're coming into support. So you can see here, this was former resistance right about 24.10. So we held resistance here. We finally broke out and we held support, and we're back down to that level. So I think we're likely going to get a bounce right here. They might gap it down tomorrow and then run it up. So look for that, but again, it does look like this is an area where I think you could probably expect at least a bounce, and this would just be a bounce trade. Where does it bounce to? That's a little harder to say, but you do have a gap right here. at roughly, we'll say the gap's roughly at 25. All right, so a bounce up to 25, I think, would be a logical trade. And that's going to be, from where we're at now, a potential of about 3 to 4%. Okay, so I wouldn't let it go too much lower. You know, if you're going to take that long, I wouldn't let this thing go too much lower. But if it, you know, and then if it bounces, I would probably, personally, I'd look to exit on the gap fill. It could obviously do more, but it's just a short-term trade I'm pointing out. Okay, another trade, CAR, which is Avis Budget Group. If you're a bull, then this is where you buy at. We're at support right now. So you can see here, this trend line, we've been walking up this trend line off the March 2020 lows, held support there, held support right there, and we're right there at support again. Personally, I don't like going long here because we have negative divergence. That tells me that this bullish trend is about to end and we're going to break trend and break down. So I suspect, you know, we might get a bounce tomorrow and then it breaks, but I suspect a breakdown's pretty imminent. So I'm going to follow up on this one. This is one of the better looking charts for a sell signal. Again, we don't have an actionable trade yet. We need to see that impulsive break of trendline support, and we just don't have it yet. But negative divergence tells me it's coming soon, so I'm going to keep an eye on this one and point it out if or when it shows up. Okay, oil. I want to point out oil. I think oil is a short, not fully actionable yet, but there is I'm going to point out the trade idea that I like. So here's oil. On the daily chart, you have this uptrend line that we've been walking up. Recently, though, we've been creating divergent highs. So we have a new divergent high. See the momentum? How we're just trending down in momentum, and we keep making slightly new highs. That's that's common behavior to kind of make, you know, slightly new highs, just barely new highs above the previous high, and then sell off. And so that's kind of where we're at right now. And it looks like oil's about to roll over. One way to potentially trade it is with this drip. Now, this is a leveraged ETF, 2 times leverage ETF. So, again, you want to use caution with these things. And these are not buy and hold instruments. These are trend swing trading instruments. You get the swing right, you can make a lot of money. But you don't, you know, if you get it wrong, you want to usually exit these things and take, you know, just get out of them. So keep in mind that, you know, because these have decay. So if it's not trending in the direction you need it to go, the decay will start to eat away at your position. But something to look at here. We have bullish divergence on the daily chart on the PPO. So you can see here PPO and RSI, bullish divergence, really obvious on the PPO here. So we're trending up in the momentum, and yet price continues to drop. Now, again, this is a bearish 2 times leverage ETF. So if oil falls, this thing goes up. What I'd look for is a break of this downtrend right here. If you go to the hourly, I've kind of got it scoped out right there. So I'd be looking for a bullish break to the upside, a buy signal on that, and that would signal, you know, a move up. Targets on this one, you know, I'll probably have to do some more homework, but clear target right here at the former lows, which I think is about 950. Yeah, 950. And, you know, that from where we're at, on a bullish break, that would be about a 20% gain. And then probably the next target could potentially be probably the former highs right there is what I'd look at. And that would be about 1396. And that's almost a double. That's almost 100% gain. So I wouldn't go much beyond that, but those are the levels I'm willing to kind of put out right now. And gold seems to wrap up here, but gold's still kind of hanging in there. It's down 20%. One thing to point out, this is important. Gold, we hit my buy target today. So that's this trend line. I have it circled right there, but if I get rid of that, if I scroll out, you'll see here, this is your uptrend in gold. We're looking at gold bullion. You started the trend here, COVID lows right there, held support again. There's 3, there's 4. And we're at 5 right now. So there is a tag of trendline support. Gold is in a bull market. I know that because you just look at the chart, and going back to 2015, you're making higher lows and higher highs. You can see we're uptrending. And you typically want to buy a bull market at major support. And we're at major support. You know, we just hit it today. So I think that's bullish. I think we're, you know, near the lows. If I look at the hourly chart in gold bullion, We did make a slightly new low there. Yeah, and we have bullish divergence right there. See that? Let me just, if I can get the line right there. See how the low that we just made today was a new lower low in price than that former low, really right here, and even right here, and yet the momentum is higher, okay? So there's the momentum's higher than this previous low that was right there, all right? So bullish divergence on the hourly, hitting major trendline support. We could chop around here a little bit, but I think that this is the area where we're likely gonna hold support and start to move higher. So look for the miners to start to show bullish, in the next couple days, maybe the next week or so. That's really all I have, guys. If you guys are new, then check out my trading course. It's really a technical analysis course. It's how to read charts and look for trade ideas on your own. Link in the description below. And then if you guys have been with me for a while, leave me a thumbs up. I do appreciate that. I'll catch you guys on the next video. Later.